Since the beginning of the month, Brookfield Renewable stock's down about 8%. There was a little bit of a bump when it reported earnings, but it's given basically all of that back. And if you look over the past year, the stock's down like 28%. If you're watching this video, you're probably wondering, is Brookfield a buy right now? Should I stay away? How do I need to think about it? I'm Jason Hall. This is The Smattering. I've got my good friend Jeff Santoro here to talk about it with me. But before Jeff and I go through it, just a reminder, Motley Fool sponsors our videos. Great partnership there. And if you're looking for more great stock ideas, even the Brookfield, go to our special link, fool.com/the smattering. The Fool is going to give you its 10 best stocks to buy right now. Hey, Jeff.
Hey, Jason. I don't own or follow Brookfield Renewable, but I am interested in the renewable energy space. And there's a couple other companies I've owned over the last couple of years. I'm curious how you thought Brookfield did this quarter and what it means for the future.
Yeah. So first of all, just to kind of break down what Brookfield Renewable does in the space. And like, if you look at a lot of the renewable energy stocks, they've done pretty well over the past year and a half, really since the Inflation Reduction Act was passed, which really didn't have anything to do with reducing inflation, but there was a lot of things in there about funding renewable energy projects. So a lot of the companies that make renewable energy equipment have done really well. Brookfield's stock, one of the reasons Brookfield Renewable stock has fallen is because it uses a ton of debt because it finances and operates big renewable energy assets. So like hydroelectric dams, wind farms, solar farms, that kind of stuff. And it takes a lot of debt to build those things out. And with interest rates having gone up and the dividend yield is like a big part of the thesis for owning it, it's a big reason the stock has come down a lot in its particular case, Jeff. So that's the thesis. That's the background. You look at the long term, Brookfield Renewable has been a huge winner. Brookfield Renewable Partners, BEP, has been a huge winner. Brookfield Renewable Corporation is a more recent ticker, one-to-one economic equivalent that you own the same thing, whether you own BEP or BEPC. So going forward, I'm talking about either one. Whichever one you own, it's going to be the same. But I'm going to look away from the screen and just hit on some of the things from earnings. So for the quarter, funds from operation, again, it's kind of a better proxy for earnings per share for this business because, yeah, every 20, 25 years, they're going to replace the wind turbines. They're going to replace solar panels, but a massive amount of the infrastructure, the real estate they own are, many, many decade lived assets and they'll still have economic value. So FFO is a useful metric. FFO per share increased about 4% in the second quarter. That was sequential. That was a big reduction in growth from the first quarter. So far this year, it's up about 10%. So again, you see only 4% in the second quarter. First quarter was really good. So a lot of concern that earnings is going to slow. Earnings growth is going to slow going forward, and that higher interest rates are going to weigh on their ability to grow their cash flows over time, Jeff. So that's one worry that the market seems to have with Brookfield right now.
So, would you say that based on that and based on the long term thesis, investors can see short term price compression like we're seeing right now as a buying opportunity?
Yeah, I think it potentially could. So again, you look at Brookfield Renewable and you go back to kind of right before the financial crisis when Brookfield Renewable became a publicly traded entity. Again, that's Brookfield Renewable Partners, BEP. And the stock kind of lagged for a long time, but then over the longer term has absolutely trounced the S&P 500. Now, the business has gone through a bit of a transformation over the past 5 or 6 years, shifting away from really just like owning hydroelectric dams in Latin America and South America to now a big player in wind and solar on a global basis in North America and also in Europe and other places. And as that transition has happened, the valuation of the stock went up. The dividend yield was pushed way down. And now we're in this environment where interest rates are much, much higher. And I think what's happened is as it's pushed the stock price down, the yield has gone back up. The dividend yield is between 4.5% and 5%, depending on which ticker you're looking at. I think their long-term history tells me these are people that know how to allocate capital. They're going to do really, really well. The demand globally for what they do is only higher now than it's ever been. So as much as higher interest rates and cost of capital can create pressure, I think they're so good at originating deals. I think investors that buy at this price and are willing to hold for the long term, 5 plus, 10 plus years, are still going to prove super happy with their decision.